Welcome to the ReachX podcast. Today we are with Ben Habib, who is the CEO of First Property Group. Welcome to the podcast, sir. Let me just jump on to the first question. For those of us who are not familiar with your brand, give us a flavor of your business model.
Okay, so First Property Group is a co-investing commercial property fund manager. We have three legs to the business, or three jurisdictions in which we invest: the United Kingdom, Poland, and Romania. The largest by assets under management, the largest region is the United Kingdom, where we have just over 400 million of assets under management. In Poland, we have about 300 million, and in Romania, we have not very much now, about 15 million.
So I would take it, the listening stage from here is that the primary business is in the UK. So in terms of the UK assets and the Central European assets, what kind of portfolio split are we looking at?
We are, as a result of our most recent fund, mostly invested in UK office property. You might recall that in 2013, the British government introduced something called permitted development rights, which allowed for the automatic conversion of offices to residential use without the need for planning permission. And we made a lot of money for our clients out of that change in legislation. Following on from that, given that so much office space is converted to resi, there's a sort of dearth of cost-effective office space around particularly in England, but where the legislation was effective. And we are therefore buying offices with a view to either converting them to residential, if that makes more sense, or just getting rental growth as a result of the dearth of office space.
Going by your latest financials, if you look at it, funds under management, they're up 12.6% on an annualized basis. So let's not go too far ahead. How are the next 12 months looking like?
Well, the next 12 months, surprisingly or unsurprisingly, are dominated by Brexit. And the market in the UK is kind of in a Mexican standoff situation. There's not many properties for sale. It's quite a pricey market still, so there's not much value available. And so we're just watching the market to see, how Brexit pans out. We are great believers in the UK economy and in the British property market. So we have been buying consistently over the last 3 years. And if we can find appropriate assets, we'll continue to buy.
Sure. And you mentioned Brexit, but there are other macroeconomic complexities on the horizon, not necessarily related directly to the markets you operate in.
Yeah.
But what kind of, if you're looking at some negative, we'll come to the positive shortly, but if you look at some negatives, what do you see ahead?
Well, there are definite clouds gathering on the economic horizon across the globe, I think. We've had a very protracted period of growth globally, and, we can see Europe is now beginning to produce some poor numbers. Germany is teetering on recession. The ECB is loosening its monetary policy. The Fed is loosening its monetary policy. Frankly, the only central bank which isn't loosening monetary policy is Mark Carney, even though he's fairly and squarely part of Project Fear. So I'm actually surprised by Mark Carney's reticence to reduce interest rates. He had an opportunity to do it, as we know, last week, and he didn't do it, which was very surprising to me. So the global economic situation is of slight concern. These things can be mitigated, and I think if interest rates are cut, and if there's another bout of QE in particular, obviously that does buoy asset prices. One of the reasons the credit crunch was so protracted but not so painful was because of QE and very low interest rates. And I suppose this could be just another leg of that sort of strategy.
Sure. We've discussed some of the negatives, some of the macroeconomic complexities, but as a businessman, you've got to have a positive outlook. So what are the sort of positives you see on the horizon?
Well, we're very positive about the UK office market still. We think that there isn't enough new development to cap the rental growth that is available in the market. So we're very keen to buy new offices as long as we don't have to overpay to buy them. So we're looking at that market closely. The retail market in the UK has been hit very hard. It's been a sort of perfect storm for the retail sector. We've had, obviously, the well-publicized migration of shopping habits from physical stores to online. We've also had minimum wage come in and we're increasing minimum wage, which puts a burden on retailers who employ a lot of, cheap labour for want of a better word. And you've also got business rates, which are constraining physical businesses. So they've had real headwinds. But because of those headwinds, retail values have dropped a lot. And they've kind of dropped indiscriminately across the sector, even though it's principally high streets and shopping centres that were in the crosshairs of the problem. So we're looking quite closely at the retail sector to see if we can find some retail warehousing and some of the discount retailers where there may be better value and more sustainable income streams.
Right, so we've looked at some positives, we've looked at macroeconomic complexities. No one has a crystal ball, but of course every CEO plans ahead. So what is the sort of medium-term outlook here? Let's say not go too far ahead, perhaps the next 5 fiscal years?
Yeah, well, we're a deal-driven business, so we're looking for new opportunities all the time. As I mentioned, we're looking for offices in the UK, and if we can find an appropriate retail asset, we'll buy that too. In Poland, we're big fans of the Polish economy. We're big fans of the direction of travel of Poland. And so we are very actively looking for investments there. And in fact, we've got 3 office properties under offer in Poland at the moment with an aggregate value of around 60 million euros. So we will hopefully be closing those during the course of the next 6 months. Deals take a very long time in Poland. In the UK, we would have done that within 4 weeks. But, I think it'll take about 6 months to get those deals done. And we will go on looking for high-yielding property in Poland.
And just to round up our conversation, you mentioned Poland. Are you or prospecting any other emerging European markets?
Well, we're a small company and we like to manage everything directly, not to use third parties to do it. So it's quite difficult for us to grow the number of jurisdictions in which we operate. We're very comfortable, obviously, with the UK. We've got great experience now in Poland, where we've been since 2005, and we've got 40 members of staff fully employed in Poland. We've got 1 member of staff in Romania. We're kind of happy with that at the moment. But if we see other jurisdictions that present value, then of course, we'll be drawn into them.
Thank you very much for your time, sir.
Thank you.